Hello, dear viewers. Hope you all are doing well. Welcome to Revision Time. We are studying Bank Reconciliation Statement Accountancy Class 11. In our previous video, we have rectified and verified our passbook and cash book, and we have prepared a bank reconciliation statement. Today, we will be looking into yet another similar problem, and we will be rectifying our cash book and passbook and preparing our bank reconciliation statement. Let me first read out the question for you. The cash book shows a bank balance of rupees 7,800. So here the balance as per cash book is given. So we have to rectify and find out the balance as per passbook. Okay. So it will be a debit balance. If nothing is mentioned, we will consider it as a positive debit balance. If anything particular is mentioned, we will consider it as given in the question, like whatever debit or credit. If anything is not mentioned, we will consider it as a debit balance and will record it in our amount of plus column, that is debit is plus for cash book. Next, on comparing the cash book with passbook, the following discrepancies were noted. Point A, check deposited in bank but not credited. Point B, check issued but not yet presented for payment of rupees 1,500. Point C, insurance premium paid by the bank rupees 2,000. Point D, bank interest credited by the bank rupees 4,000. Point E, bank charges rupees 1,100. Point D, directly deposited by customer rupees 4,000. So let's analyze the transactions and record it in our bank reconciliation statement. Our first transaction on first date of the month, that is balance as per cash book rupees 7,800. Next, we'll first list down the items which have to be added, that is add. The point A, check deposited in bank but not credited. So here we have to, this particular transaction will be deducted. Why? Let me explain you here. So check deposited in bank but not credited 3,000 rupees. Assume that when you are depositing this check into the bank, you already recorded it in our cash book that there is addition of money, there is addition of 3,000 rupees. But on the bank's end, this is not yet credited. So there is no reflection of this 3,000 rupees in our bank account. That is why, to rectify for time being, whatever we have added, we will deduct it from our cash book. So this particular entry will be deducted. Next, check issued but not yet presented for payment. Here, this we have to add. As we have looked into check deposited, so while depositing, we already added the amount and then we had presented it for the bank, but bank has not cleared the payment so far. Same here, when check issued but not yet presented for payment, when you are making the payment, when you were issuing the check to the bank, you already deducted that amount from your cash book, but there is not yet any transaction happening at the bank's end, so there is no deduction of rupees 1,500 in our passbook. So whatever we have deducted, we will add it here for time being to reconcile our cash book with passbook. So checks issued but not yet presented for payment 1,500. Next, insurance premium paid by the bank rupees 2,000. So this is paid, this is expense. As we all know that in our previous problem, all expenses we will be deducting. So we will deduct this particular amount. Next, bank interest credit by the bank rupees 400. So interest is credited in our passbook. If interest is credited, it's an addition. Credit is addition. So here we will record this transaction like bank interest credited. It should be addition for our cash book as well, rupees 400. Bank charges is again a expense. It will be deducted, so it will not be considered in our addition. Next, direct deposit by customer. Direct deposit by customer is an increase in our balance in our passbook where there is no entry found in our cash book. So we will add this entry here, direct deposit by customer, rupees 4000. Now we will deduct the transaction. That was our check deposited but not presented for, but not credited. ₹3,000. Next, insurance premium paid, rupees 2,000. Bank charges 100. No more transactions. We will total both the columns and we will balance our bank reconciliation statement. So total of our debit column is 13,700. Total of our credit column is 5,100 but 13,700. So we will reconcile here balance as per passbook. That is 13,700 minus 5,100. 8,600 is our balance as per passbook. Now we have reconciled our both the books, that is cash book and passbook, and we arrived at the balance as per passbook is rupees 8,600. So this was a very small problem, but yet there were very important transactions where we looked into how we have to record these transactions in our bank reconciliation statement. See you in the next video with yet another problem. Until then, if you have any queries, please post them into our comment section. We will be happy to help you out. Happy learning.